Hi, I'm Karen Deis, and this is the Mortgage Currency July 2014 Rule and Regulation Update. Now, just a reminder that part of your subscription also includes Mortgage Talking Points, which are articles that are written for your real estate agent so they understand the rule changes as well, comparison charts and checklists for both consumers and internal and also real estate agents. We also write Facebook posts for you that you merely need to copy and paste, and automatic tweets. They're all created for you so you can become known as the expert in your corner of the lending world. So there have been quite a bit of different things in this issue, 16 articles in all, but I wanted to give you a heads up on a few of them that you might want to read as soon as you can. So let's start with Fannie's release notes. They're concerning foreclosures and pre-foreclosures. And this announcement is kind of confusing because Fannie does not say whether they're going to allow a maximum loan to value depending on the waiting period. Right now, the rule says that there is a 2-year waiting period for a pre-foreclosure or a deed-in-lieu with 20% down, or 4 years with 10% down. Now, this new release note says it's 4 years across the board, does not provide a loan-to-value ratio, and in fact, it goes on to say, hey, you have to September 16th, and we're going to clarify exactly what we mean. So with that in mind, we did not change the derogatory waiting period chart comparing Fannie and Freddie at this point till we get further information from them. But just wanted to give you a heads up on that. Another thing you want to check out are Fannie's new incentives for borrowers who purchase one of their HomePath REO properties. Now, here's the thing about the incentives. They have been incorporated into the selling guide, but they don't show up on the HomePath website. So basically, you are in the know because nobody else knows about it. In fact, we've created a mortgage talking points for you to distribute to your real estate agents. And the incentives also are extended to non-owner occupied in addition to owner occupied. So we've broken that down, who qualifies and what the incentives are on the new mortgage talking points. On Freddie, they're doing all they can to mirror Fannie's underwriting rules, and the latest changes come in line with deferred student loan payments, how to calculate the payment, and how to calculate large down payments, whether you need to verify it or not. So what we have done is updated the deferred student loan payment chart for you to download. So again, you can use it for internal use or review that with your clients. Now, this update is mostly for FHA underwriters, but the 2800 form Statement of Appraisal Value, the form is actually expired back in March, and there is a new form available that you'll find on the website. However, we do suggest that you check with your LOS system to see if they have the new form posted for you. You can use the form for a little while, but eventually all of your investors and lenders are going to ask for the new appraisal form. And if you do reverse mortgages, you'll find 3 new articles that you'll definitely want to read. HUD is trying to eliminate a lot of the abuses when it comes to misleading advertising and loan programs that have been going on for the last few years. So they've created additional rules and guidelines for the disbursement of funds, including a couple of new disclosure forms that you'll find for borrowing spouses and non-borrowing spouses, and you'll find that on the checklist page. In regards to FHA REO appraisals, it's rare that we write about something that isn't really official, but here's what's been going on there. Now, when we talk to HUD, it appears that HUD has given a verbal and an email directive to HUD REO asset managers not to provide the original HUD appraisal to lenders anymore for free. In fact, they're not going to provide it at all. The borrower must now obtain their own appraisal, but here are some of the issues that you as a loan officer might run into. Be sure to disclose a new appraisal fee when you're doing a HUD REO loan. It may take some time for the utilities to be turned on by HUD, so that may delay the appraisal, so watch for your lock dates and commitment dates. And what if the appraisal comes back with repairs, or what if it comes back with a lower value? Can you go back and renegotiate with HUD? Can you back out of the deal? Those are things that will have to be determined, and you'll need to talk to your real estate agent about that as well. For now, HUD says to follow ML 13-44, which we've included in the article for you to read. So there's 5 different appraisal circumstances when it comes to HUD REOs. And finally, for those of you who do USDA loans, I'm sure you're probably aware of the fact that the 1980D Handbook is going away starting September 1st, being replaced by the 3555 Technical Handbook. These changes go into effect for loan applications submitted to USDA September 1st, so it's going to affect the files that you have in process now or those that you have pre-approved. I do have to tell you that a lot of the changes are really, really positive, and we have highlighted a lot of them for you in this issue. And just a reminder, Help Desk. Our panel of experts will answer your loan scenario, underwriting, and condition questions, because getting a loan approved and closed these days is rocket science. So